All right, good evening, guys. So this is going to be our 7th video, I believe, in a series. And this entire section, not just this one video, but this entire section is going to start going over market fundamentals. These are things that you must understand about a market before you really enter that market. It's going to go over some terminology, some definitions, some overall psychology, and things on how a market operates, okay? This is really, really important stuff you have to understand. However, a lot of this may be a little bit too beginner for some advanced traders who have been around the market for a while, okay? So if you do know what this stuff is, you're welcome to skip it, and I don't think you're going to miss too much important stuff. But if you're new to the market, if you don't understand what's going on with how trading works, or a lot of these basic things, you really, really, really need to understand this, okay? Once I start getting into the next section, which goes over the actual indicators, I'm going to refer back to these videos and topics and terms that I've covered in these ones. So watch this if you don't understand market structure, market fundamentals, but you are welcome to skip this entire section and go to indicators if you are comfortable with these terminologies and things, okay? So that's my little introduction to that. So the first video we're going to go over is going to go over market structure, time frames, and psychology. I'm going to cover all three of these items in this video, okay? Market structure, psychology, and time frames. So let's go ahead and get into it. The first thing I'm going to start with is the psychology of the market. And to start with, I have a few terms I want to go over. First one is going to be bulls, bears. Okay, bulls want the price to go up. Bears want the price to go down. That's what bulls and bears are, okay? Bulls want the price to go up, and bears want the price to go down. So if a market is bullish, that means it's trending upward. Bearish market, trending downward. So if I say this is a bullish indicator, that means that this indicator is telling me the market is going to go up. If I say a bearish indicator, it's telling me that the market is going to go down. Okay, bulls, bears, bullish, bearish. Think of it like this. You have two teams, two rival teams. Like if you're from Oklahoma, like a lot of us are, OU versus OSU. They're fighting back and forth, okay? OSU takes a little bit, the OU takes a little bit, and they keep fighting back and forth, right? That's how you have to understand what these two teams are. They're both fighting in opposite directions. The bulls want the price to go up, and the bears want the price to go down. Some teams will win, some teams will lose, right? And some teams, like let's say, let's go into that in a bit. Here's some important things about this, okay? Bulls want the price to go up and bears want the price to go down. However, being a bear is not a bad thing. Being bearish is not a bad thing. Okay? They're not a bad person. They're not bad people. All they want is the price to go down. So maybe they were bullish, they sold their position, and now they're looking to buy it back in lower. Okay? That means they were a bull, it went up, they sold it, now they want the price to go down, so they're being bears at this moment in time. So you can be bull overall, but you can be bear right now for the next few hours. Nothing wrong with that. Now, if you are a perma bull or perma bear, that means you're always bullish or you're always bearish. You are going to miss out on a lot of opportunities, okay? A ton of opportunities. I'm going to demonstrate that really quickly. So the best plan for you is to switch teams. You can switch teams as often as you want. There's nothing wrong about that, okay? You can be even partially bullish or partially bearish. Nothing wrong about that either, okay? Don't think of it like once you're a part of this team, you have to stay on this team. Nothing wrong about that. Successful traders are bulls and bears, and they switch back and forth depending upon what the indicators tell them. So let's go in here. I'm going to demonstrate some of this to you. This is Bitcoin in the very beginning. Now, as you guys know, Bitcoin has risen very, very high, right? Currently, as of the time of this price, it's about $55,000 a Bitcoin. At the very beginning, it started off here at like basically nothing, okay? But as you can see here, the market was bullish, obviously, right? However, if you didn't sell here at $32, you would only have made from 32 up to 261 in this movement. However, what you could have done, bought here at 0, come back up here at $32, and then sold here at $32, and then buy back in here at $1 or $2. Okay? So even though Bitcoin does go up, there's absolutely nothing wrong with selling and then looking to buy back in lower. Nothing wrong with that at all. If you were just to hold, you would miss out on this entire movement and lose money the entire way down. Okay, so let's do it again, right? Bullish, 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 bullish. Sold, you come back down here, you're bear, 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 bear. Now you become a bull. And of course, it skyrockets up again, okay? Being a bear is going to make you switching between teams is going to get you a ton more money than being stubborn to one single team or the other, all right? So you're just going to miss out on a lot of money if you stay as a perma bull or a perma bear. A good trader switches teams depending upon what the indicators tell you. Now, let's look at market structure, okay? Market structure is very important. I'm going to demonstrate it on here. Let's go down a little bit. For market structure, there is a specific time in which a market is bullish or bearish. Obviously, if you go over here, you can tell that's obviously a bullish market. But when does this market actually become bullish? That's the question, okay? The market becomes bullish when you have a low, a high, a lower low, or a higher low, and a higher high. Let me demonstrate that on here. Find what I'm looking for. Nope, almost. Here we go. Okay. All right. So here is this right here is a low and a high. We have established a low, we've established a high. Once this comes down here, but does not go below this previous low, right? Low right here, this becomes a higher low. And then once you bust above this level right here, as soon as you cross this level, this becomes a higher high. So low, high, higher low, higher high. As soon as you break above this level, this chart is officially bullish and you expect it to continue up. Okay, there's a rule when it comes to trading that the trend is your friend. That means whatever trend that the market is going, you expect that trend to continue until proven otherwise. Okay, so trend is your friend. Now let's look at the other one. Let's look at a bear market. Or actually before that, let's go back over here. So over here, when does this market become bullish, right? We have the start of our movement up here, high, or we have a low, right? Lows down here. We have a high. We have established a range at this point. Come back down here. We hit this level, realistically that level, but either way, right? Now, this has not been below this point, so this now becomes a higher low. Okay, low, high, higher low. Then as soon as we cross past this previous one, this now becomes a higher high. So as soon as it crosses past 49 cents, we know the market is bullish. Okay, now let's do it again. We have a low, a high, a higher low. As soon as it crosses past here, what do we have? Bullish market structure, and it continued up. Okay, let's go another one. Low, or actually, here we go. Sorry, this is the low. So we have the low, high, higher low. As soon as it crosses past here, what do we have? Bullish market structure. Okay, now it comes way up here. All right, so does that make sense for the market structure, right? So that's how you want to look and see whether or not a market is bullish or bearish, okay? I think I demonstrated the bull market pretty easily. Now let's go to a bear market and demonstrate how that works. Let's delete this, delete. All right, awesome. So for a bear market, you have a low, a high, and as soon as you cross here, you now have a lower low. So you have the high, the low, right? High, low, you've established a range, come back in here, did not cross above this level. So this becomes a higher, or this becomes a lower high, right? High, low, lower high, and as soon as it crosses this level, this becomes a lower low, and you expect to continue down, okay? So let's go in here and see when the daily, that work. Is it gonna go over here? All right. Unfortunately, with this chart, there's not too much you can do about it. So let's go back to we realize a good point in a bear market. Okay, this works. Okay, so we have the high right here. We have a low. This is now a lower high. As soon as it crosses past here, what do we have? A change in market structure. This becomes our lower low. And of course, as you can see, the market continued down. Okay. Now let's go over here. We have a low, a high, higher low from here, right? So as soon as you bust above this level right here at 4,200, it accelerated upside. See that? Okay. So that's how you can look at market structure. Now on market structure, you can be bullish and bearish at the exact same time, and there's absolutely nothing wrong with that. Okay, so let's I'm gonna show you this. Let's go to a monthly chart. Sorry about that. Actually, I'm gonna go on this one. And this works. All right, this works. So we have a low, high, higher low, and obviously once we cross past here, you can see how accelerated. Very quickly, okay? Very, very obvious how that works, right? So market structure is very important. So what we're gonna do now is I'm gonna go to a lower time frame and show you how, even though the monthly time frame is absolutely bullish, I'm gonna demonstrate to you, I got you. I'm gonna demonstrate to you how just because it's bullish on a high time frame does not mean it will stay bullish on a lower time frame, all right? So this is a 4-hour chart. This is a 4-hour chart, okay? Even though the monthly is bullish, you can see we have a low, a high, a lower low, once again, another lower high, and again, we had another lower low, okay? This is a bearish market structure. It's very, very apparent for you guys, all right? So low, high, or I'm sorry, you have a high, low, lower high, and as soon as it crossed back here, it never really got back above there, right? So once it came down here, once it crossed back here, it became another bearish market structure in the 4-hour. Came back here and it continued down, came back up, but it did not get above this level, which means it continued down again, right? That's how you can use market structure to get an idea. So Bitcoin is bullish on the monthly chart, and on the yearly chart, and on the weekly chart. All of that looks very bullish. Now we're going to zoom in once again. We're going to go to the 15-minute time frame. The 4-hour is bearish, right? However, let's look at this. We have a low, right? We have a low. We have a high. We have a higher low. Once it crossed back here, what do we have? Change in market structure is bullish on the 15-minute time frame. Okay, so let's look over here. Yeah, we have the low still down here. We have the high. We have the higher low, and it's crossed back here. So what do we have? Change in market structure. Okay, so this is still a bullish trend on a 15-hour chart. So just to make sure we're clear on here, this is bullish on the monthly and weekly. This is bearish on the 4-hour chart. However, it is bullish on the 15-minute chart. Okay, there's nothing wrong with this. Nothing is wrong with what I just said. It's absolutely 100% accurate. All right. So you can make money being a bull or a bear, because if you are stuck in one position, you miss out on all this choppiness to it, right? Let's see, what else do I want to go over on here? So whenever you're talking about time frame, it's very important to dictate on which time frame your indicator applies. So there's a good little system you can use that helps you understand that. Let's actually go here first. For time frame analysis, you have 3 different types of time frames. You have intraday trader, swing trader, and positional trader. So for intraday trader, think of day traders. Okay, think of someone who's trading on a very, very low time frame. All right, that means they buy and sell multiple times throughout the day. A swing trader is someone who trades over a week, 2 weeks, somewhere around there, like a month or so. And positional traders are traders who buy something or put into a short position and will hold that position for a long period of time, usually over like 2 or 3 months. Okay, over 2 or 3 months, you become a positional trader. Now, I've done a lot of intraday trading. I used to do that back in the day whenever during the bear market of Bitcoin. I did it for about a year. Okay, very stressful, a lot of stuff going on. Movements really impacted you very, very harshly. I've moved from there to a swing trader about 2 years ago. And then about a year ago, I moved myself even further into a positional trader. So that means that I buy and I hold for long periods of time. Okay. This is an idea of what you're looking for. So for intraday traders, you are trending your indicators you're looking for, whether or not it's going up or down, you're looking on the hourly chart. And for entries, like for actually looking at specific candles on when you're going to enter the market or not, is going to be on the 15-minute chart. And again, you'll be holding your position for a few hours. That's it. Multiple times a day you're trading. So for swing traders, that means you'll be looking at the daily and 4-hour charts. Okay, daily and 4-hour charts. So that's it, because the 4-hour chart will give you enough information to be able to make a decision over the next few days whether or not it's going to go up or down. And then positional, this is what I do on this group for the most part, because that's what I'm used to. So for my positional trading, I use weekly and daily charts. You guys see this a lot. I also do some 4-hour charts just to give you guys more ideas of what I'm looking for on the low time frame. But generally, I stick to daily and weekly to make my decisions. And for holding time, it says here a few weeks, but you can use a weekly candle for months out. You really, really can. And that's why I'm bullish on Bitcoin and all the alt markets for weeks and months out, because I use these high time frame candles to give me the information I'm looking for. All right. So the key here is that you can be bearish on the intraday, bullish on the swing, and bearish again on the high time frame. Nothing wrong about that. Now, when you're looking at these, there is something you have to consider. If you are trading intraday, let me do it this way, all right? If you are trading intraday, you have to be aware of the high time frame, the medium time frame, and the low time frame movements. Okay, you can't get caught up and zoomed in too closely, because if you show, I'm going to show you some of my Bitcoin charts. You can see all the different stuff I have marked on here, right? And if you go to very high time frames, you can see why I have this stuff annotated. So yeah, you can get an idea of how much incredible stuff I have on here and all the things I'm looking at. So these are some very high time frame movements and high time frame indicators that are giving me information that I'm looking for. If I'm trading on the high time frame, I simply mark out these levels and I go with it, and that's it. But if you're going to be focusing in on swing trading, or if you're focusing in on day trading, you still have to be aware of what's going on these high levels. Okay, you have to be aware of all the different things that are going on in these high levels. If not, you're going to be zoomed in too close, focusing on the really, really small details, but miss these massive, massive things that have been taking place over the last few days, weeks, or months. Okay, so day traders have to worry about the intermediate and the long-term stuff. The swing traders don't have to worry about the 15-minute candles, right? We don't care about 15-minute candles because that is just noise to us because we're looking at a higher time frame. So until you actually have a close, a 4-hour close, it doesn't really matter, right? Because we're using 4-hour candles. So we can ignore all the 15-minute movement. So you can look at this and see that's all what's happened in the last 8 hours. But you can go to the 15-minute chart and see how much actually does happen, right? All these different movements that go up and down and up and down. And so this right here are those two candles combined. And all these movements, even though they be important for a low time frame trader, is essentially irrelevant for a swing trader, right? That right there is that movement. Very irrelevant realistically, okay? And if you're a high time frame trader, like what I'm doing, you go to the daily chart and then you can see how incredibly insignificant those 15-minute movements are, right? That's right in here. Very, very, very small. Or you can go to the weekly chart and then see how insignificant this entire thing is, okay? So, but the further you zoom out, the less you have to worry about on the lower time frame, and you only have to worry about what's going on in the high time frame. So yeah, I hope that makes sense on there. So if you are zooming really close in, you can catch these really small movements and make a lot of money from that, but you have to be very careful on what's happening on the high time frame. And if you are trading high time frame, you just don't really care about what's happening on the small ones. Now, if you are trading on a high time frame chart, you have to always be aware of what level you are trading. And that becomes very hard to do because a lot of stuff happens in between the week, right? A lot of stuff happens between the week. But if you're trading on a weekly chart, you really should not care about what's happening on those weekly candles or in between the week. All you care about is what happened in between the candle and the volume. That's all you really care about, right? What happened at the close. All I care about is what this candle ended up being at the end of the week, okay? Whatever happened in between there, it's just noise to me. I try to just completely ignore it. So if you're trading high time frame, focus on the high time frame stuff only. If you're trading on the low time frame, you really want to focus on the low time frame, but you have to be aware of what's going on when you zoom out. So there's an expression you go with, and it's called "if in doubt, zoom out." What that means is that if you're zoomed in way too close and you're not sure which way it's going to go, the best thing to do is start zooming out and figure out what's happening on the higher time frame before you make a decision. Okay. Yep. 4-hour, zoom out, see what's going on, right? And then go to the daily chart, see what's going on in the daily chart. Then you can go over here and go to the weekly, see what's going on, and go to the monthly and the yearly and all that good stuff, right? So that's what they mean by "if in doubt, zoom out." I think that covers most everything. So in this video, we covered what bulls, what bears are, what makes a bullish market structure or a bearish market structure, how it's okay to switch between teams. Nothing wrong about that. Bulls are not bad people, okay? Just because they want to sell or they've already sold, they're looking to buy back in or have a short position open and want the market to drop so that they can close that short position and profit. Nothing wrong about that. Also, it's not advised to stay one team only because you're missing out on a lot of movement, okay? So like this entire period of time right there, if you zoom in, you can see for 2 weeks, if you were a bull in this time frame, you literally were losing money the entire time, okay? Like I don't like to lose money all the time. I like to make money. And in order to do so, you have to remember that it's okay to switch teams, right? Nothing wrong about that. So market structure, highs, lows, lower highs, and higher, or for market structure for a bull, you want that high and low established, and you want that higher low established, and you want that break of market structure, right? So that means you want that candle like this, 1, 2, and as soon as you break above here, that becomes a bullish market, right? And for a bear, you want to have that high and low established, come up here, make a lower high, break below here, you now have change in market structure, okay? So now we can define what a market structure is, whether or not it's bullish or bearish. You also now know about time frames, right? You can be bullish on a low time frame and bearish on a high time frame, or vice versa. Nothing wrong about that. So you can be bullish and bearish at the exact same time as long as they're different time frames. Let's see what else. I think that's basically it. If you guys have questions about this, I know it's quite a bit. If you have questions, like always, let me know. My next one is going to go over exchanges, okay? This is going to be essentially how exchanges work, what makes a price, what to look for in exchanges, and just fundamentals about what an exchange is and how all of that ties together, okay? There's a lot of really, really important stuff in there, so don't try to skip it. All right, outside of that, have a good day, guys, and I'll see you later.